Okay, good afternoon. Hello, everybody. Today is April 8th. It's Friday around 2 o'clock, 1:35 or so. So bottom line is markets closed for the weekend. Let's get started. This is the weekly take on the market. I am your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Let's go through the disclaimer. Take a moment to look at this. I'm not licensed. Nobody at Investors Business Daily is licensed to give advice. What we'd like to do is provide research, education, etc., so you guys can make these decisions on your own. Okay, so we'll go through the markets, the indexes. We'll talk about the industry groups. We'll talk about some stocks to watch. You know the drill, right? And then we'll get into the quote of the week. So let's pull up the indexes. Let me pull up MarketSmith. So here is a chart of the Nasdaq Composite, and you've got some distribution. I think that was a distribution day. Maybe that one was. Bottom line is it kind of did what we thought it would do. In hindsight, there would be some kind of rally. It was way oversold. You undercut these lows, if only for an instance, and you rallied 10% plus. I don't know the exact number, but there wasn't a whole lot to buy growth-wise. Now, everybody's favorite word at IBD, Justin uses it all the time, and I used it, and I guess a few of the people were clowning because they don't like the word, but it's bifurcated. And it just means that the market is just segmented into areas that are acting super well and areas that are acting very poorly. And it is what it is. And the Nasdaq is heavily weighted in areas that are acting poorly, right? So you undercut the 50-day today on a closing basis. You undercut it yesterday, but then tried to rally. But today you undercut it. And there's just not a lot to buy in that area. So, I don't think I have any exposure to that group specifically or to that index specifically. Most of what I own, I would say is going to kind of march to a different beat. But, if the whole market gets in trouble, it's hard to know if everything rolls over. It's kind of a tough market. When the Nasdaq was rallying, the stuff that I was in wasn't really participating. There were a few days where the Nasdaq was up big and I was down on the day. But the last few days I haven't been hurt either. So you take the good with the bad. I just think it looks like a classic bear market rally. We probably need some kind of test of the lows. Do we need to go through the lows? I don't know. What does a test mean? I would say something down here would be, would qualify to me as a test. Something that went down below this 13,094, or definitely you'd really test the resolve of the bulls there. It just wouldn't be a good scene there. The S&P is holding up a little bit better. All right, it's above the 50-day, right on the 200-day. And this green relative strength line that I just added today, I was just curious, is VTV, which is the value ETF, the Vanguard Value Etf. And you can see the alligator jaws, where value for a long time wasn't doing that well, and now it's closed the gap. I mean, basically right there. Let's go to the weekly. All right, you can see how it's closed the gap. It's value, which is VTV, is holding up pretty good. Man, look at that. It's got a relative strength of 81. Let's go to the daily. It's, oh my gosh, I didn't even realize 1% off of 52-week highs. Now, its 52-week high is not a great representation because the S&P made a much higher 52-week high relative to the COVID lows in the Nasdaq for sure. But the market, the money probably has to go somewhere. It used to go to bonds. Now it doesn't want to go to bonds. Bonds are having one of their worst years ever, and so it's going to go somewhere. And there's a lot of liquidity out there, so it's got to find a home. Maybe this is where it's found that home. If you go to the Nasdaq, now this is going to just be a straight line because I use the Nasdaq as the main relative strength, but you could see the underperformance versus value as well, and versus the S&P, right? We've talked about 100 times how it made lower highs right there. But so the jury's still out on the market. I think the IBD's got the market under pressure, which is fine. It depends on what you're in, and we'll talk about those stocks. If you're in Square and Teladoc and Zoom, then it's been a bear market. If you're in shippers and oil and gas and some mining stocks, then it's been a great bull market, and if you've been in a little bit of both, you're probably somewhere in between. Let's look at the industry groups. Well, because I mentioned it, let's go ahead and pull up, here's the TLT, which is a proxy for the long bond. It's not quite the 30-year, but 20-year plus. It's probably some combination thereof. It's down 20% off its 52-week high. And if we go to the view market indices list, probably should have looked. I don't know. I think it's CBOE. Yeah. So here's the 10-year note. Look at that. Wow. Look at that rally off the lows. And here's the 30-year bond just breaking out. And these are weekly charts. Here's the 5-year note. Let's go and pull this up. And actually, when I look at this, I'm a little bit shocked at how well the market has held up. Now, interest rates were so low that maybe that's why, but in 95, 98, 2000, 2004, 2007, when I've been in this business, if interest rates had done this, we'd be in a 25, 35% bear market at least. Any time in my career, if rates had gone like this, this is 9 and change to almost 28, that's triple. So, and I can't even see it down here. It's so low. So that's the main pressure. Then you have, of course, the war in Europe is a pressure, and if that were to ever end, I think you'd get a huge 1, 2, 3 day rally in the market. And what I mean by huge, I don't know, 2, 3, 5% over a number of days. But then everybody would look around and say, okay, now what? Our interest rates still going higher, which is, as the Fed draining liquidity, which is the main driver. So if you're curious about that, you can find these. Let me repeat how to find these. These are not tradable instruments, but there are things you can trade, whether it's futures or ETFs. But you click on this little drop-down menu, you've got the popular indices, and then you go to view market indices list. There are 56 items in here, the oil index, et cetera. And they're in alphabetical order, so you might have to search, but there are the CBOE is the one that will have the interest rates. If I pull this up at the very bottom are the ones that will show, oops, they only work on daily, so not on the weekly. But at the very bottom are like, here's the Nasdaq advanced decline, which has been bad for a long, long time. Here's the NYSE advanced decline, not as bad. If you go to this one, you've got the overbought, oversold indicator and some other things that we don't talk too much about, but I will look at these not every day, but every weekend, excuse me, when I do my work. Okay, so let's go back to the industry groups. Let's go ahead and rank them. And I haven't looked in the last few days. I haven't looked since Sunday, to be honest with you. But all right, so Chem Ag is one. No surprise, held up really well. And IPI had a great week this week. CF and Mosaic are holding in there. They look very climactic to me, but they're not going down. So hanging in there pretty good. Oil and Gas International, Oil and Gas Royalty Trust moved up a little bit. Energy Coal hanging in there really well. Canadian oil and gas, mining metal ores, steel producers, right? Does this all ring a bell for everybody? No surprise, right? Transportation ship has moved down a little bit. It's lost a little bit of its luster. Here's gold and silver, which are holding in there. They're not going up, but they're not going down either. Like Newmont and GFI, they're hanging in there okay. I think AUY. There are some stocks in that group that are of interest to me, but they're not going up. So I haven't pulled the trigger on those just yet. And here's the US explorers there. So it's all the same. Utilities are moving up the food chain. Look at here's utility gas distribution was 106, 18, 17. Utility diversified 75, 25, 20. I did notice that last week that utilities have started to hold up pretty well. It's hard to find anything can slim like in the utility group, but you know, there are stocks that have good patterns, good relative strength. They pay a yield if that's of interest to you. I rarely buy anything for a yield. I have, you know, once in a while, but you know, if you get a yield, to me, that's kind of a bonus. If that's if I buy something and I get a yield on it. Let's go to stocks to watch. Speaking of yield, so here's Gladstone Land, and this will remind me of my quote of the week. I'm a little bit ahead, but I think when I bought this, the yield was 3%. Bought it coming out of this base, and I just thought, you know, have you ever looked at what your broker is paying you in money market? In 2000, when I went to cash, because the market had topped and I was almost, you know, 95% cash or whatever it was, I was getting 6% on my money market. So I could make 6% totally risk-free just sitting there. And now I think TD Ameritrade, last I looked, paid, it was 0.02 or something. So it's, I don't know why they bother. They just might as well make it zero. It seems like the accounting takes up more. So I remember buying this thinking if it just didn't go down, it was in the area of food. I felt like food prices were starting to go higher. If it just didn't go down, I could make 3%. Problem is I just don't have the patience that I wish I had sometimes, and I got out too soon, but it's more than a double from there. Look at the yield is now 1.3 because the yield hasn't changed, but the stock's gone up a lot. So let's talk about the bifurcated market. How if you're in the right stuff, you might be doing fine. If you're fighting it because you want to be in the NVIDIAs of the world, it's going to be tough. You're going to have a really hard time. So here's NVIDIA. And if you bought it because it moved above the 50-day, fine. It's not, I did not, but that's something I will do if I really like a name. And then you've given it all back and then some. If you're quick to sell, great. ACLS, I bought this day. And I think I talked about in the video a couple weeks ago, you know, not this week that we just finished, but the previous week, you know, moved 32 points in a week, and just too much for me. They're just too volatile. If they're being sponsored by institutions, they wouldn't move around that much. So I got out, and not because I thought it was going to do this. I honestly thought it's going to go higher. I do this all the time. I get out and then they go higher, but it fell apart. I was in GFS for half a minute. I bought it on this blue day, got stopped the very next day, and it fell apart. AOSL looked okay. I haven't pulled that up in a while. Oh my goodness. So you see what's happening in this area. Rambus try to break out. So, and semiconductors is really the lifeblood of growth investing. I guess software too, but I mean, I kind of cut my teeth on semiconductors when I first started. One of my first big winners was C-Cube Microsystem, semiconductor company. They got bought out, but there's always really good companies with huge earnings and sales in the semi area. So I always keep an eye on that. SMH is kind of a good proxy for that. And you can see it's 22% off its high. and really hasn't rallied. I mean, this would be key to me. If this makes a new low, that might be a bad sign for the market. So I do watch the semiconductors really closely. Tesla, it did have, again, if you bought it off of here, great. Not something I didn't do, but something I will do if I really like the name. I don't know why I didn't buy Tesla. It's just have a hard time with that stock. But it's given back some of the gains, but you can see how it's holding up so much better than NVIDIA. So definite leadership in this stock versus some of the others. Let's go to Microsoft. Didn't make that much of a move. You've given back all the gains. Let's go to Facebook or Metaverse. Is that what? Oh, Meta Platforms. I mean, I saw some people talking about what a gift it was at 160. Well, of course, in hindsight, but was it a gift at 230, at 220, at 210? No, who knew, right? So it's just kind of dead in the water. Probably, if you were to go to a monthly chart, I would guess, and I don't need to guess, I don't have to guess, but I would guess a lot like Microsoft and Cisco and Home Depot and Apple, when they top after making huge moves, it takes a long time to go sideways. So that's probably, I think, what Facebook would do. It's not even on my screen anymore. It's not even a stock I watch because of that. I just think it's sideways for a long time. What other stocks are kind of in it? Now let's go to the other side of the coin. So Zim, amazing stock, right? Huge move, paid a huge dividend, $17, I think it was. Now you finally, this is your first, well, I talked about how I felt like it was, and look, I drew this in real time, but I wasn't in it to sell it. So take it for what it's worth, but it stopped right there. Or you could have done this one. I don't mind that one, although you're only connecting 2 points. But you had a couple of you had the huge dividends. You have very offensive sell signals if you were interested in doing that. Now, this broke below the 10-week, which is good. I actually like this. I think you can get, it's possible you could get a shakeout like this, right? A couple of weeks below it, then back above it, right? And that's what I'm looking for. This would be the third time. I'm not going to count these ones because it never closed below there, but this would be the third shakeout below the 10-week line. So it's getting a little late. I think the probabilities of it working aren't as good as the other two, but it could work, and it's in the right group. And so this, this is something I'm looking for, maybe for a potential setup. I do own, now it's shipping, but it's a different area. It's natural gas. I do own GLNG, which is just sitting there, It just doesn't go down. It's stopped going up, but it's made a big move after the pivot. And so just sitting there, acting great, right? So if you're in this one, what pullback? I do own FLNG, which is basically the same thing. If you're in this one, what pullback, right? It's just sitting there, barely budged this week. And then IPI, which I don't own, unfortunately, but just acting really strong. I mean, I would have thought today, I think at one point it was down. It looked like it had like a little hammer low like that, but it overcame that. So this group is, I don't know, just doesn't want to go down. Look at that. It just doesn't want to go down. So if you're in these ones, congrats. I got out way too soon in those ones. So maybe in the oil area, Suncor, I do own, looks very good. It's holding up really well. I just will hold it as long as it respects this line. And I've seen it. They can go a long way doing that. It's just going to be a matter of if it doesn't shake me out. CNQ, which I do not own, but same thing, kind of holding that. And then another one is it You'd think I would know the symbols because I own this one, which is Brazilian utility. What pullback, right? It's crazy strong. So, there was a couple of days, went from 8.5 to 8, which is a bit of a shakeout, but just crazy strong. I know it's Enbridge is the other one that's in the, oil and gas Canadian area. And probably just look at how tight it is. It's going to be a stair stepper, and I'll treat it the same way as Suncor. If it holds that line, I'll look for the first, close below that line, and maybe I can grab it for a while. And they all pay dividends, and they're all in the right, area where the growth is. So there is stuff out there to own. I think the only stock that I regret selling that's tech related is this one, Shockwave. So I bought Shockwave, and I think let's turn that off, because to me, I know it's not great, but to me this was a double bottom, and I bought it like that coming off there. So I either paid 185 or something, and one day it was burning a hole in my pocket, and I sold it because it does move around a lot. It seems like it's got a 10-point range each day. It's a $200 stock, but 10 points is 10 points. In other words, you're down 4, then you're up 6, or you're up 6 and then you're down 4. And so I got shaken out of this one, but this one is really acting really well. But other than that, I don't have any, there's no FOMO in the tech group. I guess Tesla possibly, and this one, but the other ones I'm sure glad that I moved on from, because they've come down a lot. So, if you're not into these types of stocks, whether it's miners or oil or utilities or what, you got to go where the fish are. Okay. I'm not a fisherman, but I said on IB Live, Ali was asking some of the stocks that I own. She thought, like the Brazilian ETF. I'm sorry, I do own the Brazilian ETF, but the Brazilian utility. And it's like, I got to go where the fish are. If you want to make money in the market, you got to go where the money is moving to. You can't say, this is my favorite fishing hole, I'm just going to sit here. There might not be any fish there. So now in the market, you can go there and just sit there and be patient and wait for the fish to come. They will come. The growth stocks will come back. It's just, I don't know how long will it take. It could be years. It could be, underperforming sector for years. I don't know. So I'm going to go where the fish are until they're not. And then if the growth stock area comes back, I'll go back there. And that's the nice thing about putting in the work every weekend. You're putting in the work. You're on top of the market. You'll notice when the move starts to come, it'll be subtle at first, and then it'll just be like hitting you over the head with a hammer, all the names that you have possibility. And one thing, Alex Marenko was on IBD Live today, and Alex is a former portfolio manager, William O'Neill, and he said, stocks, they're not your house. You can sell it and you can always move back in. I don't remember how he said it, but Bill, he said one thing that he noticed about Bill was he would do that. Bill would sell something, and then sometimes even a day or two later decide, I messed that up, I shouldn't have sold that, and get back in. So it's nice to have that flexibility if you feel like something's not right, or maybe you probe and buy a little bit and it's not working, you get out and you can go back in. It's not easy, but it's nice to have that option, that flexibility to always re-enter one of your names if you were to get out. Okay, let's go to the quote of the week. And it's from Jerry Parker at Chesapeake Capital. He was one of the turtles. I don't know if you guys know that story, but the Richard Dennis turtle trading, he just took a bunch of guys and gals off the street, so to speak. He put an ad in the journal and taught them how to trade and gave them real money. And Jerry was one of the first ones. Bill has done that for years and years. And William O'Neill too. He's given people money like that to give them a chance to show them the system and give them a chance with real money. And Jerry was on a podcast and he said, I've never met a trader who didn't agree that their biggest regret was getting out too quickly. So it's my biggest regret, my biggest weakness. It's very difficult to know how long to stay with some of these. And this is like the land, the LAND. I can't remember why I sold that. When I bought it, I had an objective, I had a reason. And, I look at that chart, never really did anything that it shouldn't have done. But somewhere along the line, I had some, I just decided to, and I don't remember needing the money. It wasn't like I wanted to buy XYZ and I had no buying power, so I had to sell it. I know it wasn't that. I would have remembered that. So there's a fine line between having sell rules, which I think are very important, and learning to hold on. It's the toughest dance that we do in the market, but this is true. I mean, there's a lot of stocks out there, and unfortunately, you tend to remember the ones that you got out of too quickly that went on to make huge moves. I'll forget about AOSL, and I'll forget about ACLS, and I'll forget about GFS. Let's pretend they do nothing forever. in 9, 12, 15, 24 months, I won't even remember those names. But if land goes to 100, I'll remember that over and over and over. So you have to fight that, beating yourself up a little bit for it. But this is my biggest battle right here. I really am battling myself and the markets and position sizing, and it's all I ever think about anymore. I think entries are way overrated. I think exits are important, but secondary to this position size and holding on, having enough so that if it goes up, it makes a difference to you, but not too much that you can't handle the pressure. So there's a fine line too. You don't want to have one share of 57 stocks either. I don't want to have one share of Nvidia, one share of Tesla, and run around and tell everybody, oh, I've owned Tesla since 2014. You guys have heard me say this before. That's a great cocktail story, but it not going to move the needle on my account. And Ron Barron was on CNBC, this Tesla and holding on. And Ron Barron is runs the Barron funds and has been in this game a long time. On CNBC, he said he was never going to sell Tesla, and he's up like probably 20-fold on his first purchase. And I thought, gosh, never. That seems like just you should never. You don't want to have that kind of lack of flexibility. But Ron Barron's got a lot more zeros than me, so maybe he knows what he's doing. But I think there's a fine line. There's somewhere in between there. You're never going to sell Tesla. You're going to let it go down 80%. I'm not saying it can or will, but you don't want to let that happen. But really, truly, and we've all heard it a million times, the big money is made in the sitting and owning these things. I bought land at 15, it's at 40. That move dwarfs any of the dividends that I would have received along the way. All right, guys. So I appreciate your time. Bottom line is, it's a tough market. If you're having a tough time, you're not alone. It's really just difficult because of so many cross currents. There are areas that are working, and there are areas that are not working. And so you have to really, be flexible to move around and try to grab those areas. That's why one last thought: group strength is so important. I know, and I was trying to end this, and I'm gonna go on, but I was listening to a podcast, and I can't remember who said it, but he said that the group is responsible for 50% of a stock's move. And when Bill wrote this book in 1988, I'm pretty certain he had the group at 33% with the sector, another 12, so basically, probably the same thing that this gentleman on the podcast said. But man, if you can throw a dart and in the first part you get is the correct group, you've got a really good chance. So you could have bought in this last 9, 12, 18 months, some of the worst oil and gas stocks, and they went up. You made money. And just think if you have other stock picking skills, earnings, sales, products and services, which, might not be that differentiated in some of those sectors, but they can really help to enhance your stock selection, EPS rating, return on equity, things like that. But getting that group right gives you a huge head start. Okay, the contact information, reach us at marcusmith.com, 800-831-2525. Have a great weekend, everybody. Thanks for your time. Bye-bye.